So like I've said, those are the two steps you will take, and then that's the first appropriation or adjustment that you will make when you are consolidating statement of profit or loss. Please, for a recap, what I said was you are going to add unrealized profit to cost of sales, and then you are going to less sales value from both the cost of sales and the revenue. That is the first adjustment that you will need to make. Now, the second adjustment that you will make is when there is investment income that is being received from the subsidiary, as it were, you are going to eliminate it. You are going to what? Eliminate it. For instance, you can see from this question we have what we call investment income from Margaret. This investment income from Margaret is investment income that is being received by the parent. This you are going to eliminate. How do you do it? Now they put 36 here. When you are preparing your consolidation, you are going to still write investment income, or you will not write it either way. Well, it's better you write it. Then you write investment income, you open bracket, 36 minus 36 give you 0. You put dash there in front of your answer. That is the second adjustment that you need to know. Then the third one is for the profit or the considered profit for the year that you get, you have to attribute it, that is divided between the group and the NCI. In other words, you have to determine the NCI from the profit that is being made by the subsidiary. Then you less it from the consolidated profit for the year to get the group. In other words, look at it, they say profit for the year here is 134. This 134, the parents do not have 100% control on it. So the one that the parents do not have control over, you will less it. You are going to determine rather, and then you less it from the consolidated profit that we will get at the end of the day. So those are the three main adjustments that you will make. So quickly, let's go to the solution of this particular topic. So like I told us earlier, whenever you have a question like this, always learn how to do what? Open the skeleton. Always learn how to open the skeleton. Very, very, very important. And how will you do that? Very, very simple. I've taught you the first class, and what I've taught you is this. I said there are two steps to consolidation. The first one is you open the skeleton, and the second step is that you add body to the skeleton. How do you open the skeleton? You open the skeleton by number one, writing out the headings. That's step 1A. Now you write out the headings. You had write out the headings, the rounding off figures, as well as the currency that you are using to determine it. That's the first part of step 1. Then the second part of step 1 is you had like items. You had like items. Revenue to revenue. In this instance, now that we are looking at center of profit or loss, it will be revenue to revenue, income to income. And that is that for that. That's how to open the skeleton. That's step 1. Step 2, you do any of the workings that is required. Do workings. That is step 2. So step 1, open the skeleton. Step 2, do the workings. Now, why do I give it this name? There is sometimes you may not know what you are supposed to do. You understand? But by you opening the skeleton, if the mark is 20 mark, if this question that we're looking at, for instance, now is 20 mark, and you're able to open the skeleton, just what I have asked you to do, revenue to revenue, this one to this one, and you write all the rounding off and the lines. There is no way, if the mark is 20 marks, you will not be able to get at least 5 or 6 marks by opening the skeleton. And if you have 5 or 6 marks, what are you looking for to pass your exam? It's not just 44 or 45 thereabout. That's how to get those marks, please. So how do you open the skeleton? Now let's go back to the question. We were told that we should prepare consolidated statement of profit or loss of Bayo and Margaret. So now we open the skeleton. We are starting now. Open the skeleton, remember. So you just write bio group consolidated statement of profit or loss. I like to write it this way, for the period ended 31st. What's the date of this thing? What date are we consolidating? 31st December 2014. 2014. This heading alone, there's no way you won't have up to at least 1/4 mark. Then you go, the rounding off figure. You write your currency first. Currency. Then the rounding off figure is always going to be the one that they give to you from the question. Please always use the one that they give to you from the question. Here we have Naira and 3 zeros. So right there, 3 zeros for them. This is the step A of step 1A of opening the bracket. Then the step 1B, I said add like item. So let's go. The first thing that we have on this this question is revenue. Yes, revenue. Let's go. Let's see it. Revenue. Then we have cost of sales and the like. So let's go. Just the way it is. Revenue is the number 1. Open bracket. So let's check it. The revenue is 1260 and 520. 1260 and 520. 1260 plus 520. David, go to the next one before you do any appropriation. Cost of sale is the next one. Then you add it again. Cost of sales. Cost of sales is 420 and 210. Cost of sales is 420 and 210. 420 plus 210. Leave it. Go to the next one. You have gross profit. Go to the next one. After gross profit, you have distribution cost, admin expense. Distribution cost, admin expense. So let's go. And then distribution cost is 180 and 60. 180 and 60, 120 and 90. 180 and 60, 180 plus 60. Then distribution cost is 180 and 60. Admin says 120 and 90. 120 plus 90. Then the next one, apologies, 1 minute please. This one is 120 plus 90 plus 90. Then this one is 180 plus 60. Please ignore the noise. Any noise you are hearing, just ignore it, please. That's that for that. So let's go. Then the next one is investment income. Open bracket again. Let's go back. I told you investment income must be eliminated. That will now be 36 minus 36. 36 minus 36. This one you can close it. So this one will give you what's this now? So this one will give you 0 as it were. So you put it there, 0. Or just put dash. It's as simple as that. Then the next item will now be profit before tax. Profit before tax. But we have income tax there, 130 and 26. 130 and 26. Profit before tax. Whatever you get is profit before tax, so you leave that space. Profit before tax. Then you put tax expense here. That's 136 plus 136. Sorry, it's 130 plus 26. 120 plus 26. Okay. 130 plus 26. I will confirm it. 130 plus 26. Now, if you write it this way, and then you know that from here you have profit. That's profit for the year. You now write what we call attributable, that is division of this profit that you are going to get for the year. Attributable. Put it there. Group. Then you put NCI. You can always determine NCI. NCI now, like I told you, how do you determine the NCI? NCI is always the percentage that the parent is not controlling. Now, you leave it. Let's go to step 2 before we come back. Step 2, I've always told you, the first thing first is you determine the year of consolidation. But under this profit or loss consolidation, you may not start with that. You may just start with determining of the group structure, workings 1. Determination of the group structure. This is very, very important, please. Determination of group structure. If you check the marking scheme, determination of group structure is always half mark. Half mark. Buyer is the one that is buying, that has a, what is it called? Share in, what is it called? In market. So B to M now. B to M. Margaret. And that's how many percent now? 60. Let's go back and check. Buyer acquired how many? 60%. So meaning the NCI is 40%. Very, very important. So you have, this month to be 40%. That's 60% is what's wrong with you? Come on. So you have it like this, 60%. Sorry, please. 60%. The NCI, you put it there in bracket. NCI is 40%. With this one that you have done, half mark is already established for you. You come to your NCI here, you put it there, 40% multiplied by 40% multiplied by, let's go back. I told you, how do you determine NCI profit? Is you go to the question, that place, that profit that was made for the year under the subsidiary, this amount here, the parent do not have 100% control on it. So 134 multiplied by this amount is the amount that the parent do not have control over. So multiply by 134. That will tell us the amount of NCI that we are appropriating. So 134, please press your calculator. 134 multiplied by 40%, what will it give to us? 53.6. So you can approximate it to be 54, since you are dealing in this thing. So we have 54. And we are done with the attributable. So what we need now is we need to get the group one. So it will now be whatever we get, the profit for the year that we get here, minus this 54, minus 54. Whatever profit that we get, minus 54. So you open the bracket down. As it is now, you have open bracket. And if this is the only thing you know how to do, you submit your paper, they will believe that there was no time. And then all the mark that you need to get, you are going to get it. Passing your exams whether ICANN or ACCA, it's all about strategy. Please take note of that. Very, very important. So let's go and to the adjustments that are required. I told you also that once you are done with this, you go to step 2, do the workings that are required. So start mainly by looking at each of your items and then looking for any additional information. I told you that the first thing that you will do under consolidation of profit or loss is to determine the group, unrealized profits, profit. And I told you, for you to determine, first of all, determine the sales value. It's very, very important. Determine the closing inventory. That's the number one thing. Equally, so that you will not forget, since you have already know what the sales value is, I told you, remove the sales value from revenue and then cost of sales. So from this question, we're told that the sales value is 84. So let's go 84. So quickly minus it, minus 84. You can even close this one. There are no any other adjustment. You can close it. Then this one, you minus 84. And then what are you going to add? You are going to add unrealized profit that you want to determine. So that will now be workings. Sorry. So that will now be our workings 2. Let's go. Workings 2. Determination of unrealized profits. Unrealized profit. That is what we are doing now. Determination of unrealized profit. So let's go. I told you first, the first step is for you to determine. First step, determine closing inventory. And we're told from this question that the closing inventory is were given directly as it were. They said Margaret still had 36,000 worth of these goods in his inventory. 36,000 is the closing inventory. 36,000 is the closing inventory. So step 1 is we determine closing inventory. And so our closing inventory is 36 as it were. Then the second step, I said, second step is you will determine the profit that was made. Determine profit that was made on these sales. And how will you determine it? Now we're told that the sales value is 84,000. Is that also? From this question, we're told that sales value is 84,000. And then the cost is 56,000 minus cost will be equals to profit. That's from this question. I'm using this question as an instance now. So therefore, our profit will be equals to, please ignore the noise as much as you can, will now be equals to 84 minus 56. Now let's go back. So you check the additional information and be sure of what we are doing. Look at it here. They said during the year ended, Bayo had sold goods of 84,000 worth to Margaret. Bayo is parent and Margaret is the subsidiary. However, the sale is being done, it does not matter. Please, just this how to appropriate, whether it's parent that sell or subsidiary that sell, anyone. So that sales value is 84,000. Then I said the good at cost buyer, that is the parent, 56,000. And so Margaret had 36,000 worth of these goods in his inventory, and had that cost to Margaret. So the cost of the sale is just like what we are even doing under your profit or loss. For you to determine your gross profit is revenue minus cost of sale. That is the same thing you will do for you to get what the profit is. It's as simple as that. So therefore, the profit for the year now is the profit that is made from this particular this thing is equals to 84 minus 56. 84 minus 56, and that is equals to 28. That's equals to 28. So that's step 2. Step 3 is that you will determine the unrealized profit from adjustment made above, from all these two made above. And how will you do it? is your closing inventory multiplied by your closing inventory, assuming that we were given the markup rate now. We just convert it to margin. To now be multiplied by margin. You understand? Now, you need to determine your margin in this instance. Let's just use it that way. You have to determine your margin. And your margin, for you to determine your margin here, your margin will be equals to, will now be equals to the profit that was made divided by the sales value. Profit made divided by sales value. So, and that will be equals to 28 divided by 84. And so that will be equals to what? Let's check. 28 divided by 84. Please press your calculator. And that will be 0.33 as it were. So please press your calculator. Is that what you have? Please, is that what you have? Sorry, please. The calculator I'm using is not functioning well as it should be. So I have 0.33 as my answer. 0.33 is my answer. Is that what you also got? Please check through, which is equals to 0.33. Therefore, that is our marginal. So our URP now, unrealized profit, will now be equals to closing inventory, which is 36, multiplied by 0.33, that is the margin that we have gotten, 0.33, and that will be equals to approximately 12. So that will be equals to 12 approximately. So this 12 that you have gotten is your unrealized profit. And what do you do with it? You are going to add it to what? Cost of sales. Please take note of that, cost of sales. So plus 12, we close it, and that will be all. I don't think there is any other preparation that we need to do from this question, as it were. This is how simple it is. You understand me? Please, consolidation of profit or loss is very simple this way. Just do it this way, and there's nothing there. If you add everything together, this one will now be sorry, please, 1260. Please, if you can press the calculator with me, I will love you. 1260 plus 520 minus 84. Ignore the nulls as much as you can. That will give us 1696. 1696. And then the second one will be 420 plus 210 minus 84 plus 12. That will now be 558. 558. You know that we are lessening it. Don't forget. You less your cost of sales from revenue to get your gross profit. So minus 1696. So gross profit is 1138. It's as simple as this. It's not something that is difficult. 1138. So that is it. 1138. Sorry. 1138. That's our gross profit. Then from there, we less all the expenses from this gross profit to get our profit before tax. So we have 180 plus 60. That's 240. You have 120 plus 90. That should be 210. I think so, 210. Then you have investment property, which is 0. And then when you take these two, to that other side, then you are going to have 450, if I'm not mistaken. Yes, 450. So you less 450 from this gross profit, 450 as it were. So when you less 450 from 1138, you are going to have a profit before tax. So therefore, your profit before tax will now be 1138 minus 450, and that will be 688. 688. Then you have tax expense for the year. That's 156. You can close it. Close this one too. 156. 156. So in other words, you have it like that. 156 minus 688. That will now be 532. So profit for the year is 532. Sorry, that's profit before. Can put it as profit before attribution. 532. Then you now do attributable, where you have already done your NCI. So now be, like I said, it will now be profit before attribution, or profit for the year minus NCI share of profit, which is 532 minus 54. That will now be 478. So 478, that's what you have, 478. So when you add it, when you add 54 to it, when you add this 54 to it, that will now give you the profit for the year. Profit for the year. So it's as simple as this. It's not something that is difficult. I'm telling you, if you follow what I've just did here, you will not have any problem at all. So please try it again and check if you are wrong or if you are right. This is how simple to deal with consolidated profit or loss, as it were. So please, this is the solution. It's as simple as that. Please, it's very simple as we have just looked into it. And we have another illustration here, illustration 3. This one, I would love you to do it. That's why I'm showing it now. Try it on your own. If you have any issue, contact me and I will put you through. Please, this is the question. On 1st January 2013, Kevin purchased 75 ordinary shares in Stephen from an issued share capital of 100,000 naira share. See below the drafting of profit or loss of Kevin and his subsidiary company for the year ended at the 1st December 2014. So you have it there. So you have additional information. 1, Stephen sold goods of 20,000, making a markup of 1/3. Making a markup of 1/3, that is, the cost is 20,000, and then the value of the sales is 20,000, but they said there's a markup of 1/3. And then they say only 20% of these goods were sold before the end of the year. The rest were still in the inventory. In other words, this 20% is the closing inventory. Then you have to also determine the margin of for you to determine unrealized profit from this question. It simply means that you have to determine first the closing inventory, which is 20% of 20,000. 20% of 20,000, I think it's 16,000. Yes, because if you do 10% of 20,000, that will be returned then 20%. Okay, so that's by present calculator is 16%, 20.2 multiplied by, yes, 2 multiplied by 20. Okay, only 20% of this good was sold. In other words, 4,000 was sold, so balance is 16,000. That is that. Then the sales value here is 20,000. Okay, let me allow you to try it and they ask me questions at the end of the day. And they said goodwill has been subjected to impairment review at the end of each year since inception. The review at the end reviews another impairment of 5,000. The current impairment is to be recognized as operating cost as directed. You have to take this impairment, you add it to the operating cost for the year. Don't forget. And then at the date of acquisition, there's a fair value adjustment, which is an additional depreciation charge of 15,000. This is brought to the charge to cost of sales. You appropriate it as has been advised. They say Calvin values the non-controlling interest using fair value method. Now, the reason why they put this additional information for is for you to know that the NCI that you have gotten, for instance, the NCI that you will get as attributable NCI from the product that is made, you have to, adjust some of these non-controlling elements in it. I told you that there are two methods that you can use to value goodwill according to IFRS 3, proportionate and then the fair value method. And I told you if it's proportionate, it means that whatever loss and whatever depreciation, whatever any charges as it were, will only be borne by the parents. But if it's fair value, the two of them will share the losses. So in this instance, we have impairment loss. They have to share it. You have to deduct the NCI percentage from the profit that is made, that you are going to get as a NCI profit. Quickly, let's do something here. What I want you to do so that to be seamless for you to, or just try it. I will really appreciate if you can try this question. I will so much appreciate it. I'm sure you can do it now. If you cannot do it, just let me know. Get back to me at the comment section. Then we'll do a video on the solution. Thank you so much for your time. I hope you have been able to learn one or two things. Please, you must pass this exam. I wish you well. Thank you.